What if I tell you that there are companies that have raised their dividends every single year for 25 years? Through recessions, pandemics, market crashes, every single year. Ladies and gentlemen, let me introduce you to the Dividend Aristocrats. Dividend Aristocrats are an exclusive group of US stocks. To qualify, a company must be in the S&P 500. Yes, the same S&P 500 I keep talking about. Yeah. Secondly, it must have raised its dividend yield every single year for at least 25 years without a single cut or freeze. And finally, the company must meet minimum size and trading requirements. As of this year, this 2026, we only have about 69 companies out of 500 companies in the S&P 500 who are considered the dividend aristocrats. And here's the thing. The average dividend yield across all 69 dividend aristocrats is around 2.55%, compared to the S&P 500, which is at an average of 1.06%. So with the dividend aristocrats, you're actually earning more income from more reliable companies. Now, why should a long-term investor care about this? You need to care because a company that has raised its dividend continuously without stop, cut, or freeze for 25 years is not doing so by accident. It means the business generates consistent cash flow across good times and bad times in the market. And it also means that the company has survived every economic cycle that the world has thrown at it and still came out paying more. For example, during the 2008 financial crisis, the Dividend Aristocrats Index fell 21.88%, while the S&P 500 fell 37%. That is the cushion that these companies provide when the market gets ugly. I'll give you a few examples of companies like this. The first one is Procter & Gamble. The ticker is PG. This company has 70 consecutive years of dividend payouts. Not just payouts and increases. For those who don't know, Procter & Gamble is a company behind Gillette, basically the shaving stick, Pampers, Tide, Head & Shoulders, Oral-B, basically brands you see and use every day. That's what this company is about. And it's currently yielding 2.7% as dividends. Another example is the Coca-Cola, which has the ticker KO. It has 63 consecutive years of dividend increases and payouts. And it just raised its quarterly dividend again this year. It's currently yielding around 2.6%. With the cleanest analyst picture of any stock in this group. Every major analyst on Coca-Cola has it on buy. It's on a buy. The next one is Johnson & Johnson, which is JNJ for the ticker. It has 64 consecutive years of dividend increases and payouts, a 2.17% dividend yield, and a payout ratio of just 47%. Which means that the company pays less than half of what it actually earns as dividend to the public. And then there's the next level above the aristocrats, the dividend kings. These are companies that have consistently increased their dividends steadily for 50 years or more. Walmart has 53 consecutive years already in the bag. Johnson & Johnson qualifies here too. These are not just successful companies, these are generational businesses. Two things you need to keep in mind. The first one is that a high yield doesn't always equate a good stock. Just because a company has a high yield doesn't mean it's a good stock. That's not what it means. There are other fundamentals that should be put in place to make sure that this is a good company for you to buy into. The second point to note is that companies can actually lose aristocrat status. For example, in 2024, both Walgreens and 3M were removed from the dividend aristocrats because they had dividend disruptions, which goes to tell you that no company is untouchable, so make sure you do your research before investing. Dividend aristocrats are the backbone of a long-term income portfolio. They might not be the most exciting stocks in the room, but they're the ones still standing and still making payments even when everything else is falling apart. So keep that in mind. Share this with your investment circle and drop your questions below. And as always, follow me, like, share to anyone who fancies content that covers both the US and the Nigerian stock market. And I'll be seeing you in the next video. Bye-bye.